Should I start now?
Yes, madam, you can start.
A heartfelt welcome to all the attendees. Greetings of the day. I, Ria Goel, on behalf of the Committee of Financial Market and Investor Protection of ICAI, would like to moderate a webinar on technical analysis of financial market. Now, without further ado, I would like to introduce the chairman of the committee, CA Charanjot Singh Nanda. He is currently serving the post of chairman for the Digital Accounting and Assurance Board of ICI and the Committee on Financial Market and Investor Protection of ICI. He is also serving the post of vice chairman in the Internal Audit and Management Accounting Board of ICAI. And now I would like to invite Sir to address the keynote to the session. Welcome, sir.
Thanks a lot, CA Ria Goel. Ria belongs from Hoshiarpur. I have my younger brother, Sachin Agarwal, who lives in Ghaziabad but belongs from Ambala. Mr. Nizak, he takes care of the technical support, and Mr. Om Prakash from Committee for Financial Markets and Investor Protection. And all members were joined in large numbers to go home more enlightened. Ladies and gentlemen, you are before an exciting committee and an exciting person, Sachin, who would drive you through the intricacies of the stock market. Stock market has so many misnomers. लोग कहते हैं स्टॉक मार्केट में लखपति बनना बड़ा आसान है, provided आप पहले से करोड़पति हो. Some people say that if God was to invent something that could confuse human minds, he could not have invented something better than the stock markets. But my instinct belief is that if you want to become a multi-millionaire by legitimate means, the market is there. If you want to create value and worth in a larger perspective, my professional brothers and sisters, market is the only perspective. And that is why last year in the council, we allowed chartered accountants practice to do derivative trading in future and options in stocks and in currencies. You have to learn, you have to create, and very importantly, create such an infrastructure where you create and invest wealth for the betterment of your family, for the betterment of the society. And as advisors, you have to serve not only your client or stakeholders, but to your regulators and government as well. You are aware that the Institute of Chartered Accountants of India was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. The Constitution to this great country was adopted on 26th January 1950. The pertinent question that arises is, what prompted the Constituent Assembly to set up an Institute of Chartered Accountants of India when its own democratic setup was not in place? The answer is very candid, very simple, very forthcoming. They were looking for a disciplined band of soldiers to steer this country out of confusion. Ladies and gentlemen, if we want to work in tandem to create value, it is only through large level of knowledge, understanding, assimilation, and more importantly, by way of technical analysis. I have specifically requested Sachin Agarwal to take a marathon session of 3 hours to take you through the purpose, why you want to invest, and what are the roadblocks, what are the loopholes, and what are the triggers on based of which you could go ahead and invest in the markets. Not taking much of time, I would end by way of a couplet. The couplet says, "Gar khairat mein milti kamyabi to har shakhs kamyab hota." अगर खैरात में मिलती कामयाबी तो हर शख्स कामयाब होता, फिर कदर ना होती किसी हुनर की और ना ही कोई लाजवाब होता. अगर आप लाजवाब बनना चाहते हैं, आप स्टार बनना चाहते हैं, आप आउटस्टैंडिंग बनना चाहते हैं, तो आपको अपने आप को ट्रेन करना पड़ेगा. You have to remember 4 things. First, do your own research. Don't follow people. Number 2, do not fancy sectors. Number 3, don't fall in love with sectors. Number 4, be disciplined and do not lay all your eggs in a basket. Sachin ji आपको हर एक कदम पर आगाह करेंगे, बताएंगे that how things have to go in the right perspective. So not standing between you and Sachin ji, the dice is again with Ria Goel to take forward and invite Mr. Sachin Agarwal to take forward this very glamorous impending topic before you, so that you, all of you, could incorporate that in your lives and create a lot of money. Happy investing, happy creating wealth through investments and markets. Thank you. Thank you so much.
Thank you so much, Chairman Sir, for your valuable insights. Now, I would like to welcome the speaker of the day, Sachin Agarwal, a qualified chartered accountant and a technical analyst of financial market, having 10 plus year of experience of investing and trading in different testing times. Welcome, Sachin sir.
Thank you, ma'am. Thanks a lot. Uh, Good evening, everyone. Good evening, Nanda sir. Uh, Thank you for inviting me here. Let us start with the journey of the technical analysis. As sir has said, market में लखपति बनना बड़ा आसान है, बशर्ते आप पहले करोड़पति हो. Point is, market is a temple of wealth. I completely agree to whatever sir has said. Market is a temple of wealth, and there is no other place better than this, no other business better than this, provided you have the knowledge. And the irony in today's world is people don't have the knowledge, people don't have the understanding. And second thing is they don't want to. Irony. Nobody wants to spend the time. Everybody want the results in what sir has said, khairat. And the word here in market, synonym for that is tips. Everybody wants tips, and everybody wants an intraday strategy. Everybody wants a shortcut for the winning. But believe me, this market is very easy to analyze, easy to make money, provided you have reasonable targets and a patience in your mind. I will prove it within these 3 hours. And I assure you, I will give you some proprietary setups which will help you, which has higher probability of winning. And whenever you are able to see those kind of setups in any stock, go ahead with the required outcome. If it is a buy, go for a buy. If it is a sell, go for a sell. And I will show you how you can easily, rather you could have easily predicted the Nifty movement beforehand. So without wasting much of a time, let us start. I'm sharing before you the charts. This is the software which I use. First 5 to 7 minutes will be ultra basic, so that if there is anybody who don't even have a basic knowledge of technical analysis, he or she will be at par with us. First 10 minutes will be ultra basic because I want to start from the scratch. But believe me, this topic is this session is going to be advanced one, and I will show you some setups. See, we have 2 types of charts available with us. This is a candlestick chart.
And screen is not visible, sir.
Screen is not visible. Okay. I have shared it again. Is it visible now?
Yes, very much. Go ahead, Sachin. Go ahead.
Yeah. We have 2 types of charts. This is a candlestick formation which is in front of you. And this is a line chart. Line chart, everybody knows, okay, how we connect the line chart. That is by connecting the closing points. The point to underline over here is closing points. Means you connect the closing points of every day and you get a line chart. This is a candlestick formation. I will go to MS Paint for a while. I hope MS Paint should be visible. No, I will share it again. Now it should be visible. If I want complete information of a session from you, this is a formation over here, which is known as candlestick formation. A candle. It is looking like a candle, mombatti, as we call in Hindi. Without any doubt, this is the highest point of the day. This is the lowest point of the day. What we actually want to do here is, if I come to you and I ask you, sir, what happened today in the market? And you are just saying me, sir, market opened at this place, open. Market made a low of this, okay. After that, market went up to make a high of this, okay. And it closed somewhere. So I require 4 points, that is open, high, low, and close. That is it. And all the things of the day, all the summary of the day is in front of my eyes. That is why there's a candlestick formation. In candlestick, without any doubt, this is your high. Without any doubt, this is a low. This is known as body of the candle. Body. This is known as body of the candle. And within this body, one point is open and the other is closed. But how we will come to know about that? That which is open and which is closed. Without any doubt, this is the low, this is the high, it doesn't make any difference. But the point is, if we are closing above the open price, suppose we have opened at 100 and closing at 105, we are closing at a higher price. So the color of the candle shall be green or white as per the charting software. It means if the color of the candle is green, the closing is greater than your open. It means this one is your open and this is your close. Now let us check it again. You opened at 100, you made a low of 98, you went up to make a high of 107, you came down to 105 and closed. The candle will be something like that, and this, the color of the candle shall be green. And if the color of the candle is red, it means this is low, this is high. Now this will be known as open and this will be known as close, because you are closing below the open. Because you are closing below the open. That is important. So let us check it. You opened at 106. You made a high of 108. You came down to make a low of 99. And then you again went up to close at 101. So this is your open, this is your close, and here is a body. Now this body color is red. Simple. This is about candlestick formations, how the candles are created. On a daily basis, you can get the candles. If we talk about a daily chart, you will get a candle like this for one day. This candle is representing one day. If you are converting it into a weekly chart, the candle shall be virtually like a candle, can be of any shape. But now it is representing Monday open and Friday close. So this was ultra basic about the candlesticks. Now we are moving ahead. We have two different charts. One is a line chart and the second is your candlestick formations. These candlestick formations are very important. Now we are straightforward moving ahead towards the technical analysis journey. What is technical analysis? Technical analysis is basically identifying the historical things and then deciding what is going to happen in the future. Suppose if I ask you that will the rain come today, you will all say no, depending upon where you are. And if you are saying no, why it is? We are not environmental scientists, but the thing is, we know if there are clouds, then only the rain will come. If the clouds are not there, there is no possibility of a rain. How we learned that? We have not learned it, we have seen it based on the basis of history. And the point number two, whenever the clouds will come, will it rain? No. So what is the highest probability of a rain? Highest probability of a rain is month of monsoon, night time, wind is breezing like anything, there is a thunderstorm, lightning, that is it. And there is a high probability that the rain will come today. Technical analysis is identifying the right time to take the trade. Technical analysis is identifying the right side of the trade. And above all, the technical analysis is to ensure that you are not on the wrong side of the trade. So technical analysis is first to not to be wrong. Second, try to be on the right side of the trade. This is what the technical analysis is. High probability trading based on historical patterns. If something has happened in the past and the same thing has happened today, We don't have any reason to believe that the outcome will be different to what has happened in the earlier time. If the price has moved up at that time, today also we expect the price to move up. Simple. Go ahead with the same, with a stop loss. Obviously, whenever we are taking a trade based on the technical analysis, we always believe in one thing: always have a stop loss with you, because this is the risk which you have to understand. Then only the reward will be in your favor, right? So we are moving ahead on these premises. Just to give you a second example for technical analysis, and after that I'm proceeding with it. Whenever we have seen any movies in which there is a rebirth story, same temple, same wind is blowing, same leaves are blowing with the wind, and वो जो मंदिर की घंटियां बज रही होती हैं, and all this chanting and all that. This is a pattern of a death. In the starting point of the movie, hero died, and at the end of at the time of climax, the villain will die. But it is a pattern of a death. We all know that yes, somebody is going to die. Even if we have not seen the movie before, we are seeing it for the first time. Same as with the case of technical analysis. So we are moving ahead. Now we are done away with ultra basic thing. Now we are going for a basic. Next 5 minutes. Technical analysis is propounded by, or rather inspired by, the Dow theory. Mr. Dow identified that there are two types of trends in the market. One is an uptrend and the second is a downtrend. But the point is, when we can identify an uptrend and when we can identify a downtrend, he says that the uptrend has a characteristic, and that characteristic is that this high will be greater than this, and this high will be greater than this, which he says higher highs. And this low will be greater than this, and this low will be greater than this, which he says higher lows. So if any stock is making higher highs and higher lows, which we normally say higher tops and higher bottoms, then the stock is said to be in an uptrend. When it will come in a downtrend, it will come in a downtrend when the stock starts making lower tops and lower bottoms. Mind one thing, there is an S with that: lower tops and lower bottoms, higher tops and higher bottoms. So the point is, when we will come to know that the trend is reversed, Dow theory is unable to give us an exact reversal formation, although it gave a one which it says lower tops and lower bottoms. Suppose we were in an uptrend. Yes, we are. We made this low and we made this top. Suppose we are standing over here. We had a feeling that we might go up for a Dow theory to be on. But the price came down. The moment it broke this level, this is the first second low which it has made, but no second high is there. We have to wait. Stock has all the right to go from here up and say that I protected the Dow theory. Okay, stock made this high, and after that, the moment it break this, Dow theory will say, oh, the trend has reversed. But so the problem is, too much of this move is wasted. Suppose somebody was long somewhere here. He has not made any money virtually, and he has seen a lot of money, but he was not able to make money out of it. What we say, haath ko aaya, muh na laga. This is a problem with the Dow theory. That is why we needed, there is a research which happened, and we needed something else to be taken care of with Dow theory, and that is why all the patterns were made. Remember one thing, technical analysis is an invention of human being. They have a characteristics. What? They want to buy at the bottom and they want to sell at the top. Dow theory gave you indication here. They started inventing some patterns. They invented a pattern of reversal formations They found one which is known as head and shoulder, which somehow gave you a sell over here. Still, they were not satisfied. Now they wanted to sell somewhere here, for which they again invented one formation which is known as double tops or multiple tops formation. Still, they were not satisfied. They wanted to sell at the highest point, this point. Then they invented candlestick formations. So what the technical analysis is all about? Now we are virtually ending the basics. This is a buy, okay. Technical analysis is all about identifying when to buy and till what time to hold. Below that, there is a clear sell, okay. Technical analysis is all about finding a sell, when to sell, and to which point to hold. But what about this? Technical analysis is all about, again, finding the reversals so that we are able to sell here, here, or here, depending upon the pattern. Selling at an opportune time and till what time to hold. So technical analysis is all about identifying buys here, identifying sells here, which is known as continuation formations, and identifying reversal formations here. And again, identifying a reversal formation here for the purpose of a buy. Simple. And technical analysis actually helps in doing these kind of solutions. Okay, we are moving ahead further. Now I am sharing a chart in front of you. This is a line chart and a Nifty daily chart. This is a Nifty daily chart in front of you. I will prove you before 9 p.m. how you could have predicted all the Nifty's movements. And it is very simple. You could have predicted the tops and bottoms of Nifty. Okay, we are moving ahead. There is a chart. Dow theory is on, as we are able to say. When we are making this, higher tops and higher bottoms are there, we are okay with the Dow theory. Two more points about Dow theory. Dow theory says that the trend is on till it is reversed. The stock is making higher tops, higher bottoms, is in an uptrend. Uptrend will remain as it is till the time it is reversed. When you will come to know about when it is reversed, either a pattern or a Dow theory lower tops and lower bottoms. Trend is your friend, means try to be a buyer in an uptrend, try to be a seller in a downtrend. Trend is your friend, and trend is on till it is reversed. Now, first formation which we will learn is head and shoulder formation. I know head and shoulder and double top, many of you must have understood it, but I will show it in a different perspective. Stock is in an uptrend, okay. It is making higher tops and higher bottoms. It is making going up, comes down here, goes up here. Till that time, as per Dow theory, yes, you are in an uptrend. You have all the right to go here, but price has other ideas. Long holders were waiting that the price to move like this, but no, the price didn't move out. Price bagawat karna chahta hai. It wants to betray, and it starts coming down. Remember one thing, that you will have to start talking with the charts. That Mr. Chart, Mr. Stock, you are coming down, okay, we don't have any problem. But if, I will explain what this line is, but if you close below this line, I am putting this Lakshman Rekha in front of you, Mr. Chart. If you close below it, then I will go and short you. Please, उस समय मत कहना कि मुझे बेच दिया. Don't tell me at that day that you have sold me. What is the reason for that? Because I'm taking a first mover advantage. I'm going for a pattern. That pattern is helping me out to identify a trade, to identify the first mover advantage. Let us check it out what it is. Suppose some rat, it has climbed on me. It is climbing on me like this. And I'm wearing a Bahubali type clothes. Now this is a shoulder to me. This is a head. This is again a shoulder to me. The rat is coming up, okay. It is a shoulder. It is here around the neck. Again it went up here, head, फिसल जाएगा, समझ में आता है. Then it again goes here, neck. This is the second shoulder. When it was here, we are talking about this level. It goes up again here and again comes down where the stitches are there. Boss, the moment this rat steps below this line of the shoulder, you will say, sir, please don't move. First time in the history, there might be a possibility that the rat wants to come down. And I'm also happy that actually it is coming down, because if it would have came out here, I would have thrown it like this, Dow theory. But the moment it is standing here, boss, this is the first more advantage. I want to take a trade, but this trade is against the Dow theory. I'm taking a trade, but this trade is against the Dow theory. I have to respect it. The respect is I'm taking a calculated risk, point number one, and I'm taking a risk with a very small stop loss. So I'm willing seller. I'm willing to take my bet that yes, price will come down and I want to short here. Remember one thing, you cannot short a stock positionally without derivatives, right? Just a disclaimer that you are shorting a stock. And remember again, second disclaimer, whenever we are talking about technical analysis, we believe on this theory that you are not holding any position, right? Because there is a difference between exit, sell and short. Let me explain it first. Suppose you are holding a position in a stock. When any pattern is there and there is a short, means sell. Sell to you means number one, exit the position because you were holding a position. Now the second thing this sell is saying you, boss, if you are capable enough and if you are if you are available to take a risk, then you might think of shorting it. Because long guys has two mentalities. One is only long, they shirk shorting, and the second is they long also, they short also. So the sell here means for them first to exit the position which they might have created here. Second, short. And for those guys who are not having any position, it means go and short. Okay, I'm selling it right here. Just at the blink, the price has closed below it. For all the patterns, closing is important. All the patterns are considered on a closing basis. The moment you are closing below it, go and short. What is the stop loss? My stop loss is this Lakshman Rekha, this line itself. This line is known as neckline, and this line is crafted by joining these 2 points, point number one and point number two. These are nothing but my neck points, because if I consider this to be a shoulder, this to be a head, this to be a shoulder again, these are my neck points. So if I am joining this point with this point and I allow the line to move forward, this line is known as neckline. And the moment the price breaks this neckline, there is a short available. Go and short the trade with a stop loss of this neckline, with the smallest of stop loss available to you. With the smallest of stop loss available to you, the stop loss is very small. It is just like a Lakshman Rekha. Suppose you are sitting in Delhi. The moment you cross the Kundli border, आजकल तो peripheral बन गया है. The moment you cross the Kundli border towards Haryana, you are in Haryana, and the moment you came back, just one leg here and there, and oh, now you are not going to Haryana, you are in Delhi. That is what. You short here, your stop loss is this only. If the price close above it, exit the trade. Again, the closing is important above the line. Exit the trade, your stop loss is hit. Simple. With the smallest of stop loss, let us see what is the target. Whenever we talk about a pattern other than the candlestick formations, they always give you a target. Now the target is very simple. By law, we will learn the targets. Calculate the breakdown point. Point number one. Calculate the breakdown point. In our case, the breakdown point is this. Now calculate the highest point of the pattern. The highest point is this. Calculate the difference between the two and subtract it from the breakdown point. If this is 700, this is 600, the breakdown point is 600, highest point of the pattern is 700, the difference is 100. Subtract this 100 from this breakdown point, you will get a target of 500. The stock will go down to 500 levels, and with a minute stop loss available to you. This is the risk reward ratio available to you. Now I'm going away from the topic for a minute, and I will come back. Technical analysis is all about taking a calculated risk. Taking a calculated risk means taking a trade with a stop loss and a reward. Stop loss is known as risk, and the reward is known as the target which you are targeting for. The risk reward ratio should be at least 2:1. 2 is the reward and 1 is the risk at least you are targeting. Because technical analysis again works on this premise, mark it carefully. 50% probability of a success is of a spin of a coin. And technical analysis probability is 70%. If you are taking a trade based on the patterns, that obviously you are expecting or targeting a 70% plus hit ratio. Means if you have taken 100 trades, it is expected that more than 70 trades shall be right and less than 30 trades should be wrong, in which your stop loss will be hit. But the point is, how much money you have earned when you are right and how much money you lost when you are wrong. If you are wrong, say you lost 10 rupees in 3 out of 10 trades, and 7 trades are winning trades in which you earn 20 rupees. Means you will earn 140 and lose 30. There's a gap of 110 minus the expenses, obviously. But even if the probability of spin of a coin 50-50, you will earn 100 rupees and lose 50 rupees, again the profit of a 50. If your analysis go haywire and you are a loser in seven trades out of 10, then you will lose 70 rupees and you will make 60 rupees out of the 3 winning trades at a loss of 10, obviously plus minus your expenses. But the point is, you can also recoup that because your stop loss will be final. You're not going to pay more than that. The second thing is, let the profit go ahead. As they say, pick right and sit tight. If you allow, now this is a place where might of a destiny happens. If you happen to carry on one trade in 1 year, 2 year, 3 year, 5 year down the line, doesn't make any difference. That will pay you back all your losses also. So the point is, we target 2:1 risk reward ratio together with a blend of probability of success, because we are taking a calculated risk. This is basically the premise of this technical analysis. I know a number of retail investors who are actually losing this money. Why? Because the risk reward ratio concept is not perfect. They take an equal trade with a success ratio of say equal. Boss, you are bound to lose money. They take a trade when they take a profit of say 6 rupees and they are happy to lose 10 rupees. They will never make money out of this market, because even if your success ratio is 70%, you will still not be able to make enough money in this market. So this is the problem. That is why the intraday retail investors lose money in this market, because the risk is big and the reward is less. And second thing which they do is, whenever any stock goes in a profit, they book profit quickly, but they keep holding the loss-making positions. Important definition of a technical analysis again is, stop loss means stop loss. You are not going to hold the position. And second thing, you will only enter into the trade when your risk reward ratio is 2:1 minimum. It can be higher, and your risk is within your appetite. Your risk is within your appetite. Before moving ahead with the technical analysis, I would like to spend one more minute over here. What we talk about appetite. What is appetite? See, the point is, ideally we say that whatever money you have, you should at least give 100 chances to yourself and say to the market, Mr. Market, please make me wrong 100 consecutive times to throw me out of the market. Yes, we understand that all the retail investors don't have too much of money. I will come to that. If you have enough money, give yourself 100 trades means, and that too uniformly. Means for every trade, your stop loss shall be such, which is equal to 1% of your portfolio size at max, right? The person who has comparatively less amount of investment, try at least 50 trades. Person with further less investments, no problem at all. There is no harm being such a kind of a person. At least give yourself 20 chances. 20 chances. And tell to the market that, Mr. Market, please make me wrong 20 stop losses hit consecutively, because say first time your stop losses hit and second time your trade is okay. You lost 10 rupees, you made 20 rupees, say. You are increasing your chances. If you are not going to be out of the market, now believe me, you will make money, because that is why that concept is for you. Rising tide lifts all the boats. This is the time when you are able to stay in the market. Market has a downtrend, market has an uptrend. Yes, and those trends, you will definitely make money. In the last 3 years, I think I have not, rather, I'm not able to understand anybody who might have lost money. If somebody has lost money, he is talented guy. He need to have a talent to lose the money, because market has increased like anything. Rising tide lifts all the boats. Whichever stock he might have invested, obviously with a bouquet of stocks, he would have made money. So these are the times which comes in the market. And the second and the last thing which I would like to talk about here is, if you are a person with a 20 kind of stop loss, please distribute yourself to 1 year and say to the market, Mr. Market, I will not be out of this market in less than 1 year times frame, because you have to prove me wrong 20 consecutive times, that too in 1 year. Now people will say, sir, 20 stop losses can be hit in a 1 month if you are wrong. Yes, this is what we call time distribution. In first month, obviously you will not allow the market to hit your stop losses more than 4. If your stop losses, 4 stop losses are hit in a 1 month, please stop trading right now for this month and go for the vacations. Now you are going to come out with a fresh trade only in next month, that too 3 stop losses allowed at max. This is how you distribute yourself in a time zone. Because there might be a possibility that your setups are such, or your understanding about the market is such, that you are not able to identify this market, this movement. Movement is different at different point of time. Now this is what we call time distribution also, time management also, and your trade management also, with a 20 chances. Believe me, the moment you are going to be wrong, have a breath. Not more than 4 stop losses in a month. Some trade will come which will bring your stop losses back. So virtually you require more than 20 stop losses to be hit, because some trades will be right also for you to be out of the market, which will never happen if you work on a basis of calculation. People learn technical analysis, still they lose money because they don't learn this thing. This thing is very important. One is a risk reward ratio, and the second is distribution of risk as per your appetite in the number of attempts, and the third is distribution of the stop losses with a span of time. The moment you have done this, you have the patience for doing this, believe me, there is no reason why you will not make money out of this market. This market is for you, and you are for the market, and the wealth is waiting for you. Okay. Now we are done away with all the different stuffs and the basic stuffs and the risk reward ratio and all that. And now from now onwards, I will be totally devoting my time on technical analysis. I manage the time properly. मैंने गुरु movie देखा है. I will close my deliberations 1 minute before 9 p.m. or 15 minutes before for your question answer time. So I will adhere to the time. Don't worry about it. And I will complete my topics also. This is a head and shoulder formation by which gave you a cell and which gave you a target also, a beautiful head and shoulder which was waiting for you to happen. And I will show you whenever it is made, it has brought you some money, right? Okay. Now, what if the price is coming down? As you are able to see lower tops and lower bottoms, the price is coming down. Price went up and again came down. It is an inverted head and shoulder, as if the shadow of the head and shoulder in the water. Head and shoulder doing a pranayam. Price is in a downtrend. Lower tops, lower bottoms are still on the move. The moment the price is making such a kind of a situation, such a kind of scenario, such a kind of a picture, we will start talking with the chart, not here. Because if you sense a reversal here, you will not be able to sell it. Please mind it. Because if you start sensing a reversal here, it will be difficult for you to identify a short opportunity. No, we will only talk and sense about the reversal when the price moves somewhere here. That Mr. Chart, oh my God, you are willing to make an inverted head and shoulder, this being a neck and this being a neck again. And if I join these 2 points, starting from this point and ending at this point and allowing the line to move forward, Mr. Chart, if you close above this line, I will buy you. फिर मत कहना कि buy कर लिया. I will buy you because this is the level I am waiting. The moment you will cross it, I will buy you. What is my stop loss? My stop loss is this line only. In case you will find a stop loss in this line, I will tell you how to optimize this line also. But in case you will find a problem, this line is my stop loss. Simple. That is it. And my reward is breakout point. This one, let us name as A, say 400. And the lowest point of the pattern for a buy, the breakout point, the target is breakout point and the lowest point. For sells, the target is breakdown point and the highest point, obviously. And the lowest point is B. Suppose it is 320. The difference between them is 80 rupees. You can easily expect the price to move to 480. That is it. A reversal is happening. A reversal is happening. Okay, let us check it out. Here is a chart of Nifty. Look at this. And before moving ahead, let me tell you one thing categorically, that for a head and shoulder, there is a myth that the shoulders has to be same. See, we are not painting. Price is making on its own. We just need to understand the sense. That is it. If I'm a person like this, this shoulder is tilted up and this is tilted down, can a rat cannot climb on me? It can. And my cell will always be here. This stitched part, that is it. So if my head and shoulder is something like this or like this, they're all head and shoulders because we have to go by the means, go by the meaning. We are not painting. Price is making on its own. Painting thodi na kar rahe. Look at this. Even a blind person can see that there is a huge uptrend. What a beautiful uptrend, a non-stop uptrend in the stock. And look at this. The price has made this shoulder. The price went up, came down. We were expecting it to be going up and it went up again here. Now, the moment the price came here, this is the time when I will start talking with the chart. Mr. Chart, you are in an uptrend. Yes, I'm very happy with you. I'm joining this point with this point, and I will allow this point, this line to move up. Sir, Mr. Chart, if you break this line, I will short you. फिर मत कहना बेच दिया. If you break this line, I will short you. The moment as short is came down below this, go and short. It is a head and shoulder formation breakdown. Look at the levels. The level is around 4,700, the horizontal line. 4,700 breakdown point. Look at the high. The high is around 6,200. The highest point. The difference is around 1,400. Difference is around 1,400. Deduct this 1,400 from 4,700. The target is 3,300. Look at this. This is your 3,300. The price further came down. And again, look at this. When the price made somehow some bottom, there's a multiple bottom formation. We have not done it. We will do it in a minute. You would have bought it here. Okay, no problem in that. And while at the journey moving up, it made an again inverted head and shoulder, a shoulder, a head, and a shoulder. And if I join this line with this line, now I will talk to the chart. Mr. Chart, the moment you will cross this, I will buy you. And you will keep holding this trade till the time, and you will keep buying again and again. This is what I was talking about, optimization. You will keep buying again and again till the time this shoulder is not breached, because the price came down. Okay, stop loss set, again gave you a trade. Tiger जिंदा है, pattern जिंदा है. The pattern वापस आया है. It has come again back. That Mr. Trader, I want to go up. Look at the target again here, 4,600 here, and this is 2,600. 2,000 point of move is waiting for you to happen, and the target is 6,800. Look at this, and the price covered this. Now some people will come and say, so the target was 6,800, and now the price has made 6,300. What to do? Always remember one thing, a thumb rule for anything. Any pattern which is made, if it has fulfilled 70% of the target is say 100 rupees, and if it has moved up or down, whichever way it was intended to move, 70 rupees, say okay, target is achieved by means. Mark it carefully. Obviously you will hold on with the trade because you want further 30% also, but you will not wait for the stop loss of a pattern. As we say in Hindi, अब आप पैटर्न का पैंडा छोड़ दोगे, पैटर्न के मुंह को खड़े नहीं होगे, किसी और को पकड़ लो. Now in English again, now you will not hold your trade merely for the pattern, merely because of the pattern, and merely following the pattern. You now have to hold a hand of something else which is technically available with you. Technically means based on technical analysis. Now you will have to mark your stop loss based on something else this has done. For example, if I go in an astrology, if some astrologer says you that in next, say, just making a hypothetical example for making the things to be understandable, in next say 1 year, 6 months, you will earn this much of a rupees. Suppose we will take a small example, 5 crore rupees. And in that period, because of this planet, and in that period you earn 3.5, 4 crore rupees, will you say to the astrologer, so boss, my planets are not working? No. Now the thing is, that planet which wanted to give you something has already done its work. Now some other planet will start having its impact, good or bad. Merely because of that, you will not hold on your position. That is the thing. That is the care which has to be taken. It means whenever the 70% of the pattern is hit, pattern has done its own bit. Now अलग से stop loss identify कर लें. Now identify the stop loss yourself by some other technical analysis tool. I will show you that also after say 15-20 minutes. Now look at this, and you will be surprised to see that we are on a daily chart now of Nifty. Oh my God. Look at the bottom of 7,500 which the Nifty made, again based on the inverted head and shoulder. Further, I would like to explain what the head means. There is again myth on that also. If the price moves up, comes down, price moves up and moves like this, and then comes down and falls. What was this all as head? Go by the means, go by the intent. Ravan ke 10 sar the. Let it be, na? Point is, the logic is there is an uptrend and Dow theory downtrend, low. There is again a low. Stock was supposed to move higher, it didn't. It made this low, okay. We gave the stock more chance. At this point of time, Mr. Stock, if you are willing to, please go up. But no, stock की हिम्मत तो देखो. Rather than going upward, it starts coming downward. It means it is losing out of steam. And when it is losing out of steam, historically we have seen that if the stock has made such a kind of a pattern, more often than not, the trend actually reverses. It forces the Dow theory to reverse. Then when I expect that the Dow theory is going to reverse, why to sell here? Why not to sell here? Why not to take a first mover advantage, that too with the smallest of the stop loss? So the heads can be multiple. Don't worry about it. Okay. Now it will be a bit difficult for you to understand, but it is there. Okay. What is a shoulder? What is the definition of a shoulder? There was some fogging around. What is the definition of a shoulder? Shoulder definition means shoulder high should be lower than the head. Simple. Look at this. This was a beautiful uptrend that the top of the market before COVID. Here is a shoulder, here is a head, and here is a shoulder. Look at this. If I join this, this is a shoulder, sorry. If I join this line with this line, look at this. The market gave you a sell at 11,600. There were earlier many sells also. At 11,600, it gave you a sell. What is the target? 12,400. High, 11,600, 800 points downside from here. 10,800 is your first target. The moment you break this level, there is a bigger target which is waiting for you. This is an M formation for you, double top. We will talk about it. There's a fresh sell, which is what I am talking to you, that you leave one pattern, you hold a hand of another pattern. कि चलो जी अब इस पैटर्न के सहारे चलेंगे. And now there's an again fresh sell at 10,700 around with a high of 12,400, again around 1,700 point downside, means 9,000 level. Sheer sell. We have to learn this. We have to understand this. So enough, we have talked about this one formation. Why? Because it was the first formation. The same things will which will follow in the next formations also. The next formation here is M formation, which is known as double top formation. Look at this. The price is moving up. It make a high. It comes down. It goes up again. Now it is a second formation, reversal formation. It goes up again and goes near to, exactly equal to the level of the first high, goes slightly above than the first high, or stays slightly below than the first high. What is the definition of slightly low definition? Merely by the looking at it, it should look like an M formation. It should look like a double top formation. If you are feeling it as a double top formation, yes, it is a double top formation for you. Otherwise, it is not for you. There is no hard and fast rule, because there is n number of things available on social media that it should be 1%, 2%, 3%. No, it should look like an M. Simple. Nowhere it is mentioned as a thumb rule. It starts coming down. Remember one thing again, till the time the price is here, we will not even think that the sell is going to come. If you start thinking that the sell is going to come, boss, you will never take this uptrade. Stock is still in an uptrend. The Dow theory is saying it. And this is a beautiful formation. If it moves like this, I will be a ultra willing buyer, because stock will not come to this level again. These kind of mark this formation. This is known as ascending triangle formation. So the point is, we will not accept that the price might come down till it doesn't come here. The moment it comes here, okay, now we'll talk to the chart. Mr. Chart, earlier you made this low. If you break this low, it means there is more weakness than this movement. This movement had a weakness, but buying emerged. If you break this low, it means this down move is coming with more fuel. And first mover buyers have also lost money. So this is again a sell for us. The moment it breaks this line, which line? The line designed by joining this line as a horizontal line. The moment price closes below this line, go and short. This is the level when you are going to short it, sell it. This pattern gives you a bigger stop loss. The stop loss is the difference between this and the pattern and the high. Stop loss is big, no doubt about it. And the reward is also equal. 1:1 risk reward ratio trade it as. This is a trade with a 1:1 risk reward ratio. But yes, people say it that it comes with a high probability. I will show you how to optimize it, how to bring your stop loss down. You take this trade here. This is first target, and again, this is your second target. That is why this pattern is very good. It has a first target and a second target also, and it has a habit of creating multiple bigger targets. It marks a permanent reversal. It has a more strength. And mark my words, what we said, in an uptrend and a downtrend, we sold here on the basis of head and shoulder. We sold here on the basis of Dow theory. We sold here on the basis of a double top. Humans have created it. Similarly, if the price goes up, comes down, goes up, comes down, goes up, comes down, it is hovering somewhere here. It makes three tops. It is triple top formation and a breakdown. If it makes multiple tops, it is a multiple top breakdown. You are going to short it here. The more time it devotes, mark my words, the more time any pattern devotes at a particular place, the more time it devotes to make a formation, to complete a formation, the bigger result it will be. The result will be too much. The result will be bang on, highest results you can expect. Because as we say in Hindi, जितना समय पैटर्न ने बनाने में लगाया है, उतने समय तक और उतना लंबा उसका अप ट्रेंड या डाउन ट्रेंड चलेगा. The more time the stock has spent to make a formation, the more time the impact of this formation will remain with the stock. Okay, let me show it. Look at this. Oh my God, even a blind person can see that. This is the bottom of 2009 after the Lehman Brothers crisis. Mark the date you will find here. Look at my cursor. You will find the date here. Look at the date. The first bottom was made on 24th of October 2009. And the last bottom was made on 6th March 2009. 6 months it has taken. And look at this. When the breakout actually happened in April 2009, it means more than 6 months the stock has taken to make a formation. The impact is going to be blasting. Too much accumulation has happened. Never miss such a kind of formations. Please never miss such a kind of formations. And look at the rise. And again, an inverted head and shoulder, very big size. Look at the size. Shoulder, head, and a shoulder. Look at the target at 4,700 and the lowest 2,600. We have checked it. 2,000 point up move, which is waiting for you to happen. Name any stock. You will be surprised to see. Look at this Tata Steel, and here is a sell for you. Head and shoulder formation sell. Here is a beautiful buy for you. I would like to show you a very beautiful coincidence, not only a coincidence but a correlation which actually happens in the market n number of times. This is the Tata Steel when all the steel cycle was changing. Mark the date and the month. November 2020. Formation is inverted head and shoulder. Steel Authority of India. Virtually the same formation. Mark the date of the breakout. 14th November 2020. All the breakouts are happening in the steel sector in the November month. Look at this another formation, GSW Steel. Again an inverted head and shoulder breakout. And this is the first mover happening in October 2020. Jindal Steel. Look at this formation, November. Look at a beautiful shoulder and a big head and a beautiful shoulder. The breakout is happening in 19th November 2020. Tata Steel, लगभग 9-10 November. Steel Authority, 14th November. Jindal Steel, 19th November. What is happening? Remember, mark my words carefully. If you are able to identify a sector is giving a breakout of point number 1 in the same month, virtually around the same dates, and most of the stocks are giving you a breakout with the same pattern. I repeat, majority of the stocks giving a breakout of some pattern in a particular month near to the specific dates. Near to the specific dates, and virtually most of the stocks are giving the same formation. It is a buy or a sell, whatever. Bang on that sector's tectonic plates are changing. Too much accumulation has happened. That sector is going to be the sector of the future, sector in flavor. Money has actually moved in that. Go and buy the stock. Go and buy the sector. Nothing else. Start analyzing a sector rather than analyzing only a stock. I will show you one more example, then a latest example after that. Look at all the banking stocks. SBIN. When they started moving up, look at this beautiful inverted head and shoulder formation. And before that also, look at this, a beautiful inverted head and shoulder here again. Gave a breakout, exit, and again a buy. Then is candle around the dates. The dates are actually one of the dates is August 2020, and the second breakout which is happening above this high, because you can easily create this head and shoulder. Look at this, a shoulder for you. Shoulder is a shoulder, maybe of one day, maybe of less days. A much awaited breakout of an inverted head and shoulder in November. So 2 months, August and November 2020. After that, Canara Bank. Same formation, double bottom breakout, December 2020. Then is PSU banks we are talking about. PNB. It has been a laggard. It has been a laggard. ICICI Bank. Double bottom breakout here, somewhere here around October 2020. It gave a breakout, but till the time this is not broken, all the breakouts are happening again and again. Look at this, October 2020, the second breakout time, August and October. Then is your Axis Bank. Double bottom breakout. Look at this date again, October 2020. Keep naming the stocks and keep naming the sector. You will find whenever a particular sector is moving, breakout is happening. That sector is going to be the sector in flavor. Same case when they start falling. Recently, when the IT started falling, all the IT stocks gave a breakout virtually in the same month. Sector starts following sectoral index also for to sharpen your understandings. To give a small disclaimer, since we are here till 9 o'clock, I will take a 7 minutes break at sharp 7:20. Sharp 7:20, I will take a 7 minutes break and we will reassemble at 7:27. Right? Okay, we are back. This is the power of technical analysis. Now, let us move ahead with some more chart patterns. One of the beautiful chart pattern which I like a lot is a cup with handle formation. And you will be surprised to see the kind of results it has. Remember this thing. This was a head double top, multiple top also, like this. And reverse of that, we have skipped that. First, we will do a double bottom also. Double bottom will also be like this, a W formation. Here is a buy. And again, if it goes down like this, goes up, comes down, goes up, comes down, triple bottom and a multiple bottom for the stock. Beautiful formations they are, and they mark a permanent reversal. The more bottoms it is actually doing, it means this level is going to act as a major support level for the stock, and stock is finding it difficult to go below that. No fuel is there for selling. More and more buying is occurring. Everything is demand and supply, and based on the demand and supply, the price is actually moving up. This is a concept here. So these were reversal formations. Now let me show you one more formation. That formation is cup with handle formation, and after that we will go to the indicators after the break. A cup with handle formation, a beautiful formation. Cup with handle formation is like, it falls under the category of continuation formations. Continuation formation means when we talked about this thing, when to buy, sir, you buy at a reversal. I missed this reversal, okay, or I'm willing to take a continuation buy because this target is hit. Now what to do? As I told you that you have to hold your position based on something else. You will try to identify formations over here for buying. These are known as continuation formations. So by default, the continuation formation means there is a trend, there is a sideways movement, and there is a trend again. So during this consolidation, price has three trends: uptrend, downtrend, and sideways trend. During those consolidation periods, the stock is making such a kind of a formation which is looking like a cup, with a handle. Let me show you. These cup with handles can be of many forms. These cups, obviously, uptrend has to be there before that. These cups can be in the form of a cup with a handle. It can be in the form of a pure cup with a handle. These can be in the form of a cup like this. As we remember, some milkmen used to give milk from this kind of a shape. It can be in the form of this. It can be in the form of this. Okay, I will make it again. It means price moved up, it came down, it went up. It went up till here, or above it to make like this, or below it, and then again goes for a sideways movement, and then again moves up. Point is, we are not painting. Price is making on its own. It should look like a cup and it should look like a handle. That does it. The purpose of a cup with handle formation is there has to be an uptrend, there has to be a bit of a downward movements, and time consuming time. It should consume time here. As they say, किसी को हरा नहीं सकते हो तो थका दो. If you cannot beat anybody, make him fatigue. And then the price again moves up. And after that, this is a first mover advantage. Retail investor also enters into the trade like this. Then again, a small consolidation happens again. This is to remove these kind of retail investors. And again, after that, the price starts moving up. Whenever you are able to identify or spot this cup with handle, mark my words, the stock has least probability to reach to this level again. This level will mark as a long term bottom for the stock. अगले 2-3 सालों तक there is a high probability ये load नहीं कटने वाला है. This low is not going to break for say next 2-3 years. There's a high probability of that. I'm shifting from the topic for a minute because I want to utter one line, and after that I will come back to my topic. There is one line which is saying in this market, पैटर्न का बनना ट्रेड है. If there is a pattern, it is a trade. But पैटर्न का फेल होना jackpot है. If the pattern fails, it is a jackpot trade for you. Whenever there is a pattern, go for a trade. Whenever there is a fail of a pattern, bang on the trade. Go with the double quantity. It means if this pattern hit, because the stronger the formation, the higher probability that it will move up. Somehow, if the stop loss of this pattern is hit, bang, go and short. And if this level is broken, please throw away the stock like anything. I will show you. I'm back with my pattern. This pattern can also be like this, a designer cup. Point is uptrend, consolidations, minor uptrend, small consolidation, and move up. Two more formations like this. This cup can be in the form of this, as we used to bring water out of what we call a matka, a kumbh. It can be a long handle, or it can be a very short handle. I'm not sharing my experience, but only giving you an example. As we use a spoon for a washing machine, again it is looking like a cup. The whole premise is there has to be an uptrend, sideways consolidation, and the sideways consolidation is of a boring days. The price is not moving here and there. It is spending time. It again moves up but a bit, and again goes for a small consolidation and again moves up. That does it. How we will come to know that the price is actually moving up? Okay, I will show you a cup with handle, and after that I will show you how to identify it. Whenever I show a cup with handle, I always show this first. Look at the beautiful cup with handle formation. Even a blind person can see. Look at this. There is an uptrend. First, look at this. There is an uptrend. After that, there is a sideways consolidation. Price came down, price went up again, and again goes for a sideways consolidation. A beautiful cup with handle, even a blind person can see. Look at the double bottom here. We have done it. Look at the inverted head and shoulder here. We have done it. Shoulder can be very small also. Doesn't make any difference. Shoulder is a shoulder. Price is making it. You got a buy here, you got a second buy here, you got a third buy here, and again inverted head and shoulder formation, and you get a next buy here. How to identify a breakout point of a head and of an cup with handle formation is you have to join the highs of the candles of the handle. You have to join the highs of the candle of the handle in such a manner, in such a manner. Now I'm started uttering law in such a manner that maximum candles high is below this line. One or two highs, two, three highs above this line, acceptable. No problem in that. Because if I try to complete all the highs, my breakout will be higher. I will be late in taking a trade. That is why the law is start the point start this line from the point where the cup is completed. The first point shall be the point where the cup is completed. And after that, the second point shall be such that the maximum highs of handle are below this line. And now talk to the chart, Mr. Chart. If you break this line, I will buy you. Don't dare to break this line. If you break this line, I will say to the word that boss, breakout is happening, a big breakout which is happening. There is a buy, and I will buy here only because the price actually closed on this line, just above this line. And if you assume that it is not closing above this line, buy on this line. Don't worry about it. What is my stop loss? My stop loss is, just a minute. Let this voice go over. Just a minute. Yeah. My stop loss is lowest point of the handle. Lowest point of this handle. I am buying here at say 10,000, say 11,000. I'm buying at 11,000. My stop loss is 9,700. Obviously, it is a big stop loss. I will show you how to optimize it. And what is my target? Breakout point and the lowest point of the pattern. Double. Stock will double. Again, the stock has made, look at this, again a cup with handle, wo doodh wala, a milkman. Look at this, an uptrend, a pyara sa cup and a handle and a breakout at around 19,800, say 5,000, 19,500. And look at this lower side around 12,000. 7,500 points further upward movement is expected. Okay. And after that, the price has made, again, what a beautiful head and shoulder move. What a beautiful, sorry, cup with handle formation. Chai pee ke chal raha hai. Here is a breakout. Look at this. This is what I was talking to you. First point shall be this. Second point shall be such that the maximum highs are under this. Only one high is above it. Let it be. Here is a buy. Buy at 55,000. What is the low? Low is 30,000. Around 24,000 upward movement is expected. 79,000 target which is coming for the stock. Look at this. Now let me show you a beautiful observation, and you will be surprised to see that I'm not related to any party. This is a monthly chart of Nifty which I am showing you. I'm taking a picture of it, and now I am moving on. We are going in a break in a minute. I will continue with it after my break. Don't worry. Look at this. Only 30 seconds more. There is an uptrend. There is a sideways movement, and there is a cup. There is a cup like this, and a sideways movement and a handle. Cup with a handle formation. With these words, we are going for a break. I will explain from here only. We are reassembling at 7:28. Uh, Riya ji, we are going for a break.
Yes, sir. Okay, fine. We will meet after exactly 8 minutes.
8 minutes, 7:28. I will start sharp at 7:28.
Okay, sir.
Hi all, we are back. Right at the stroke of 7:28, we are back. We are moving ahead with it. I'm still waiting for 20 more seconds for the people who have not joined. They can join. We were here. We were talking about the cup with handle, which Nifty made on a monthly chart in 2014. After this pattern, I will go with the indicators, and you will be surprised to see that there is a saying in the market that the charts made first and the news comes later. Okay, we are going ahead with it. Look at this. This is a beautiful cup with handle formation which Nifty has made. This is an actual cup like this with a handle like this, small handle on a monthly chart. Needless to mention, okay, just give me a second. Uh, Needless to mention that the breakout happened on this candle. Right now, I'm going to my chart. We are here on a Nifty monthly chart. Look at this breakout with a cup and a handle. With a cup and a handle, and cup with a handle. Mark my words. Month when it started, October 2010. Month when it gave a breakout, March 2014. 3.5 साल का पैटर्न, 3.5 years. The Nifty has consolidated for 3.5 years, gave a breakout in March 2014, and the party in power today came in power in May 2014. Market knew well in advance, boss, big breakout is happening well before even the election results, and big breakout, 3.5 years consolidation, which marks a trend that this level will not touch again in the lifetime. As I mentioned, cup with handle lows are sacrosanct lows. They are the lows of Dow theory. And look at this, but look at the targets. Around 6,400 breakout point. What is the low? 4,600. 1,800 points upside from here at 6,400. More than 20-25% upside, more than 25% upside, which the price is saying that index will rise. What will happen to the stocks? Another one thing. Last for cup with handle. This reminds me of a very beautiful thing. The chart of Adani Enterprises. Non-stop upward movement. Look at this beautiful cup and a beautiful long handle. And look at this, the stock gave a breakout. What a beautiful breakout. And after that, there at this point, the breakout failed. Stop loss of the formation was hit somewhere here at a blue line. Final stop loss hit at this handle low. As we said, पैटर्न का बनना ट्रेड है, पैटर्न का बिगड़ना जैकपॉट है. If there is a pattern, it is a trade. If there is a failed pattern, it is a jackpot. It has happened n number of times during the lifetime of n number of stocks. When people come and say, boss, we are not able to predict, or we are still holding Adani, I always say one thing, boss, there's multiple breakdowns which have happened over here. Obviously, it is very easy to make a postmortem. It is a double top formation also. There is no reason why you should be holding the stock below 3,800. If you are holding it, you are not a technical analyst, you are not seeing the charts, or you don't know how to see the charts. At least you should not be having the long position. As they say, technical analysis is all about not to be on the wrong side of the trade, and then is to try to be on the right side of the trade. Okay, now moving forward, I will continue with my deliberations till 8:40. After that, we will have some space for taking the questions. Now I am moving ahead with indicators. Apart from the patterns, there are many indicators which help you to identify the trade and to identify what actually is happening. We will also talk about today's scenario during my deliberation. First indicator that will help you to identify the bottom, and as I told you, I will give you some setups through these indicators. These all are our proprietary setups, and you will love that. First setup is how to identify a bottom in the stock. We are going with the MS Paint first. Since we have limited time available, I will not explain in detail how this pattern is, or rather indicator is formed. You will get to know this from anywhere. There is an indicator called Bollinger Band. Bollinger Band, people call it. It has 3 lines. It is nothing. Center line is merely an average line. You calculate the standard deviation. You plot the standard deviation on the upside, which is known as positive standard deviation. You plot the standard deviation on the downside, it is known as negative standard deviation. Normally, 2 standard deviation is used, and we get this Bollinger Band available with us. And obviously, these 2 lines will never touch each other, because one is a positive standard deviation and the second is negative standard deviation. And center line is nothing but it is merely a average line. Normally, 2 times standard deviation, 2 standard deviation is used. We have tinkered with something. Now I will show you how you will plot. The name of the indicator is Bollinger Band or Band Bollinger. The standard parameters is 20 days average and a 2 standard deviation. Average parameter is used as simple. So if I plot for you, if I plot, it will come like this. When we understand the Bollinger Band, we come to know about this, that whenever there is a sudden squeeze, whenever there is a sudden squeeze in the stock, this is the time to buy. Let me show you. Sudden squeeze, this is the time to buy. Sudden squeeze, this is the time to buy. When you are going to buy, when the price closes above the green line or above the upper line. If I go to your stock BSC, look at this, a sudden squeeze and a buy. This is a beautiful buy which you have. CDSL, a sudden squeeze and a buy, beautiful buy it is. So this is the bias which this candlestick formation, Balkrishna Industries, a beautiful buy here. This is the standard formation of a Bollinger Band, for which the Bollinger Band is known for. Now we have tinkered with it. Note down the parameters. Point number 1, we will use only weekly chart. We will use only weekly chart. Before moving to this pattern, I want to show you one candlestick formation which will be used in this combination. So first, let us do that candlestick formation. We learned about candles. Candle has a body. Okay. What if we have a candle like this? Can we name it, or is this kind of a formation is resembling something? Yes, it is resembling to a hammer. It is resembling to a hammer. What if the upper shadow is like this? This portion is known as shadow. These things. The upper shadow is something like this. Yes, still it is a hammer. The test of a hammer is, assume that you have to hold in your hand and you have to hit a nail. Are you able to hit it? If you are able to hit it, it is a hammer. Simple. Hammer or hammer like formation. Color of the candle is immaterial for us. Whether it is green, whether it is red, or some other softwares, the synonym for green is white and synonym for red is black. We don't mind, color can be any. But the point is, it should be a hammer. It should look like a hammer. Okay. Now we are back on our system. We want Bollinger Band on a weekly chart. We will change the average from 20 to 21 because 21 is also a Fibonacci number. And we will change the standard deviation from 2 to 2.75. Only weekly charts, please note it down. Only weekly chart, average 21 and the standard deviation 2.75 instead of 2. Now we are on with our trade. I'm changing it. Simple average 21 and standard deviation 2.75. Plot. It is a weekly chart. You can see a W over here, weekly. Look at my cursor, right hand side bottom. Now what we have to see it. Weekly chart, Bollinger Band with 2.75 standard deviation, and we want a hammer like formation. We want a hammer like formation at the bottom, and the formation shall be such, that it is touching. Touch is important. If it is not touching, not a pattern. If it is touching, it is a pattern. It may penetrate to this level, we don't mind, but touching is important. It may penetrate. We want a hammer on a lower line of the Bollinger Band, means negative standard deviation, and the hammer should at least touch. Mark my words, there is a high probability that the bottom is there for the stock. High probability, might not be. This is the only study which will help you buy in the panic. When we are going to buy, we will buy only if the price closes above the high of the hammer. So we need to wait for the price to give a close. Ideally, we require a weekly close. I will optimize it. Ideally, we require a weekly close. But for weekly close, it is a Friday's close, which is too far. If it is closing on Monday, okay, no problem. Mark this level. Na? This level is 142. If on Monday, Tuesday, Thursday, any day, it is closing above 142, go and buy. Wait till Friday. If you are an aggressive trader. If on Friday, it again closes above, it remains above 142, it is okay. If it goes below 142, you can exit. So that your first mover advantage feeling is not taken out of you. And if you are a very small trader, you don't want to risk the money, that on Monday it closed on 142 and on the next 4 days it came down too heavily, then what to do? Then you can do another thing. You can buy on Monday, Tuesday, whenever it is closing above 142, keeping 142 itself as a stop loss. On any day it closes below 142, you exit. On any day it closes above 142, you enter. With an idea that here you are waiting till Friday. Method of optimization. So you will enter only on a close above high. Weekly close is required as far as we are concerned. As far as the pattern is concerned. What is the stop loss? Your stop loss is low of the hammer. Low of the hammer is your stop loss. Since it is only for buying, not for selling, this pattern never gives you a sell. This pattern is only for bottom identification, for buy identification. Your stop loss is low of the hammer minus 0.5%. आधा percent नीचे. If the low of the hammer is 124, the 0.5% is 60 paisa only. 124 rupees 80 paisa minus 60 paisa means 124 rupees 20 paisa. Why we are saying 0.5% below low, 0.5% less than low? Because n number of time we have observed that because of these algos, price closes just 5 paisa, 10 paisa below the low and just run away. So we don't want to miss out that. That is why we have dropped our stop loss to 0.5% below low. Means if the price is 500 around, 2.5 rupees below the low, 5 is around 1000, price is around 1000, 5 rupees below low, price is around 100, price is 50, stop loss is 50 paisa below the low, right? Simple concept. This pattern does not give you the target you decide on your own based on many number of things. The simplest thing is go for an average, maybe 50 days average, maybe 100 days average as your stop loss, whichever is applicable as per the chart. This is the bottom for you. I will show you in some charts. Look at this. Sorry, Nifty. Look at Nifty. Here is a hammer. And again a hammer. Hammer-like formation. When you are going to buy, you are going to buy above this. You require a close above the high of the hammer. Look at the bottom. Okay. Let me show you more in the Nifty itself. Oh my God, what a beautiful hammer. And look at the buy. You name the stock. You will keep finding it. Here is a buy. You bought it here. The price went up a bit. The next situation is the moment you are entering into a profit, the first idea is to book out that much of the quantity so that your stop loss is free. Look at, oh my God, double hammer. Even a blind person can see. Color is immaterial. Nifty has made majority of bottoms at this. Oh my God, again a hammer. Again a hammer-like formation where the price never touched. If touching is there, not there, touch me not is there, please don't enter into the trade, because we want a complete optimization of the. Oh my God, what a beautiful hammer. You name the stock. Let me show you a stock of Petronet. Again a hammer. This one is a hammer. And look at this, the stock again went up after that. This is the latest. And before that, this was a hammer. The stock, this center red one, big one. Sometimes the hammers are very big, non-tradable. So let it be. Na? I want to show you this. This we entered into the trade on this day. At that time, it used to be around 100. A hammer and a hammer. So double hammer at the same date, blasting trade. Don't think just buy any stock. HCL Tech. Please test yourself. Look at the hammer and look at the bottom. It is the only study available which will help you enter into a trade at a panic. Look at the hammer. Oh my God. Only a bottom fishing trade. Only the pattern which will give you a buy trade. No sell trade will be there. Don't try a sell based on this pattern because sell के parameter अलग होते हैं. Sell has altogether different parameters. Buys happen in a panic because market fall like a waterfall. So it falls quickly. It is easier, bit difficult also, but easier to hit the lower line with a shadow and a reversal. Merely on the 1 week price action, we are able to identify the bottom in the stock. And the moment you identify a bottom in the stock, boss, go and buy. Since you are buying, if you have a comparatively bigger stop loss, you can buy with a less quantity. Less quantity. This quantity will be decided based on the thumb rule which we discussed. Money at risk for one trade. We always believe in this thing. Even if the God comes and says, boss, Mr. Sachin, go and buy this stock, I will say, okay, God, I will buy only this much of the quantity which I normally buy. That is it. Whatever the God may utters, boss, go and buy. But sorry, I will not go out of my trade management rules, because if I follow my trade management rules, there is no reason why I will be out of the market. And if I'm in the market, there is no reason why I will not make the money, right? Okay, I hope you would have loved this formation. This is our proprietary, which we proprietary pattern. We have named it as a golden hammer. Okay, only on a weekly chart, 2.75 standard deviation, 21 days average, and the price has to penetrate, and you will buy only on the close above the high. Obviously, sometimes the stop loss also hits, because this is an art. It is not a science. But the risk reward ratio is in your favor like anything, right? So there is no harm being continuing with this formation. Now I'm giving you one more cherry picking trade, a high probability trade, a trade which gives you again a bottoming formation. Why I'm stressing more on bottoms? Because most of the participants or most of the traders are normally a buyer. So if I don't want to create such a kind of a scenario, so we are only talking about sells and all that, blah blah blah. One more very beautiful buy trade, one more indicator. The name of the indicator is MACD, moving average convergence divergence. Moving averages, convergence and divergence. It is nothing. Let me first explain the indicator in 30 seconds. These are two moving averages. Obviously, we all know whenever the price goes up, the fast moving average always goes with the price. The bigger the average, the farther it will be from the price, right? If the price is moving up, assuming, right? So if the price is 1 rupee on day 1, 10 rupees on day 10, 20 rupees on day 20, 21 rupees on day 21, and 100 rupees on day 20, on day 100. Every day it is rising with the date 1 rupee. So if we calculate 10 days average, it will be latest 10 days 91 to 100. If we calculate 50 days average, it will be 51 to 100, right? So the 10 days average will always be higher than the 50 days average. The 10 days average will be around 96, say, and the 50 days average will be around 75, 76, right? So whenever these averages, not going by 10 or 50, any averages, which we are talking about, they come together, come to each other. This is known as convergence. Whenever these averages go different from, not different, whenever there is a gap between the averages, this is known as divergence. Whenever the averages, the space between the averages is less, it is convergence. The space between the averages is more, it is divergence, right? So the indicator name is MACD, moving averages, convergence and divergence indicator. Okay. Normally, when we plot this indicator is plotted below the price. Below the price. This MACD indicator is below this, right? This MACD indicator has a zero line and it moves with the price like this. The point is, whenever the indicator is around zero, the moving averages are coming closer to each other. Whenever this line is above zero, means there is a difference. The more the difference between the line and the 0 point, the more will be the difference between the averages. It is just like a flower which is opening up, right? So by default, if this average line is here and the zero line is there, there is a difference. The averages line will be like this. There will be a difference between these two. And whenever they are closer to each other, it means the average line will be like this. The gap between the averages will be less. So the setup for the normal move MACD is above zero, it is a buy zone. Go and buy above zero. Below zero, it is a sell zone. So the average MACD works on this. Above zero, go and buy. Look for the buying possibilities. Below zero on MACD line, look for the selling possibilities. As we talked about the Dow theory, you have to use something else. So we are using MACD for that. This is a normal MACD which is working out. Okay, now we are going for our charts. I will remove this and plot MACD line. Look at this MACD line. Parameters as a standard 12, 26 and 9. These are standard parameters used by all the softwares. And the moment I plot it like this dotted line is a zero line. The stock name is HCL Tech. You will always find one thing, that till the time the price is above zero, then only the price will move up if it has to. Or I can use a reverse definition. If the price is moving up, you will find the MACD line above zero. If the price is falling, you will find the MACD line below zero. Now this MACD line further has two lines. The green line is an MACD line and the red line is an average line of MACD. Moving average is average line. MACD line ka average hai. This is the average of MACD line itself. Means red line is the average line of green. The crossovers of MACD lines is very important. What this indicator talks about is all. Okay, just give me a second. I want to tell one more thing. What is crossover? This is one line and this is second line. If the red line crosses this black line from below, it is bullish crossover. Green line, it is bullish crossover. If the green line crosses the black line from above, this is bearish crossover. What MACD talks about is all the bullish, if it is a zero line, all the bullish crossovers above zero are beautiful buys. Go and buy. And all the negative crossover above zero is exit. Don't short. Please buy, exit. Again buy, exit. Don't short. When you will short, all the negative crossovers below the zero line, these are sells. I will show you. Here is an MACD line. We all are student of law. We all are chartered accountants. Two conditions. Above zero MACD, yes. Positive crossover, yes. Buy. Condition violated. Those two conditions are not there. Above zero, it is there, but bullish crossover no longer there. Exit. No longer a buy. Buy again. Exit. Buy again. Exit. Buy again. Exit. Mark my words. giving you one more parameter, which I never intended to. It is coming only out of on its own with the flow. Any stock which is trading at all-time high, point number one, or any stock which is trading above 52-week high. We want all-time high stock, but if we don't find all-time high always, so we have to bear with 52-week high. Use MACD in those stocks. Normal standard MACD, you will love it. 52-week high or all-time high, preferably all-time high stock as in front of you. This is a stock which is an all-time high. Take all the buys, buy, exit, buy, exit, buy, exit, buy, exit. You will never lose money. If you are using the same in the all-time high, there's no reason why you will lose money. But the patience here is all-time high. If you follow the pattern, follow it carefully. I'm just showing Adani for your reference. Although whenever any stock goes up, you use any parameter that will work. So I will not press on that. Above zero stock all-time high, buy, exit, buy, exit, buy, exit, buy, exit. Simple. Siemens. Stock is at all-time high, maybe above this. All the buys. Buy, exit, buy, exit. You are making money, not losing too much. Buy, exit, buy, on. Any stock. When the stock was at all-time high, somewhere here. Buy, exit, buy, exit, buy, exit. Here you might have lost money. Buy, exit. All the money is back with a profit. And again, a buy and an exit. Name any stock. Any which you are willing to. Means buy, exit, buy, exit, buy, exit, buy, exit, buy again, just an exit. There is no reason why you will not make money. Look at the beautiful cup with a handle formation. Oh my God. And look at the, sorry. Look at this cup with a handle, a bigger cup with a handle formation. And look at this बहुत ही प्यारा inverted head and shoulder formation. Obviously gave you some hiccups. And after that, and again, a beautiful inverted head and shoulder, head and a shoulder, giving you a very beautiful targets. Use MACD. The moment you realize the potential of MACD, na, you will love it. Any stock. One more stock. Any okay, let us use IT. When the IT was at all-time high, somewhere over here, I will use it like this. Buy, exit, buy, exit, buy, exit, buy. Conditions has to be fulfilled. Stock is above, MACD line is above zero and a bullish crossover. We have never uttered that the bullish crossover should come above it. If it is coming, it is okay. Buy, exit. Two conditions. MACD above zero, bullish crossover. आंख खोलो और देखो है, buy है, नहीं है, exit है, खत्म. Buy, exit, buy at this point above zero. Exit. Simple. This was a normal MACD which is available, which came with a flow. Now, the MACD which I actually wanted to show you, for which we started this. Suppose sometimes you get different indicators from MACD. Since MACD line is plotted below the price line, That is why we are coming out like this. Market carefully. Prices going up and making higher tops, higher bottoms. There is an uptrend in the stock. There is no reason why this uptrend has to be mistrusted. Clear uptrend is there. Price is making higher tops and higher bottoms. Price is coming down, but it is not because it is heavy. That is why I have slowed down my pace. Price came down, but it didn't closed below the low. Means in other language, price has not made lower low. Price has not made lower low. ये नहीं बना. Price is here only. But MACD has made a low. One line in Hindi. प्राइस तो थोड़ा गिरा, MACD पाताल में चली गई. प्राइस थोड़ा गिरा, प्राइस ने नया लो नहीं बनाया. MACD कहती है मैं तो लो बनाए बिना मानूंगी ही नहीं, और MACD ने नए नए छोड़ो बॉटम मोस्ट लगा दिया. नाउ इन इंग्लिश अगेन, price has not fallen too much and price has not made a new low. But MACD has broken all the lows. MACD has broken all the lows, means it was just willing to go down like anything. Means MACD is coming down sharper than the price. But mark my words, all the indicators are calculated on price. So when you are calculated on price, why you are falling like this? When the price is not falling, but you are falling like anything. I repeat, price has not made new low, but MACD has made a new low. A beautiful observation. This is known as reverse divergence. We call it reverse divergence. MACD has said, boss, मुझे नहीं जाना, मुझे नीचे जाना है. MACD has said, I want to go down. Mark my words, this is a panic. We want to capture this panic. How we will buy? I will show you. Look at this. Oh my God. Price has made this low. MACD made this low. Price made a higher low. MACD made higher. Price made higher lows. MACD made higher lows. Look at this line first. Here. I will do it just after that. Don't go by my line. The trade will be before the line, right? So that you will not be able to have misinterpreted. Okay. Price has made this low. MACD has made this low, which is lower than the lows. Price has made a higher low, but MACD has made lower low. This is the trade which we are looking for. Price is still following the Dow theory, but MACD is not following the Dow theory. This is known as reverse divergence. Whenever you are able to see that, go for a buy. When you are going to buy, look and wait for the crossover of MACD only. because जिसने दर्द दिया वही तो दवा देगा. The indicator which has given you a panic, that indicator will only tell you when you will have to buy it. You will buy it the moment there is a positive crossover, even below zero. Even below zero, because obviously it will come below zero because it is a panic. You will buy at this level and your stop loss will be low which the price has made during that rally. I repeat, price does not make a new low, but the MACD makes a new low. Wait for MACD to easen out, to come out of panic, to come out of shackles. Because यही नीचे गई थी ना, यही जब ऊपर आएगी. It was only the indicator which fell. Now, whenever this indicator will turn again, I will be a willing buyer. I will buy on this day. And my stop loss will be, I will enter on MACD. My stop loss will be low of the rally which the stock has made. This horizontal line is my stop loss. Okay. I will show you one more formation. Look at this. A next formation. Oh my God. Price has not made a new low. But look at MACD, it has made a new low. And the low is below all the lows. Oh my God. And this is applicable only on daily charts. That is important to utter over here. This is applicable only on daily charts. This is the level when I'm going to buy, I will buy on the break of this. The moment MACD gives me a crossover, I will buy on this crossover. My stop loss will be low of the rally. Cherry picking trades they are. Does not give you the exit. जब आपका पेट भर जाए आप exit कर जाए. Whenever you are happy with the trade, you exit. I will show it in Nifty. Whenever it will make, there's high probability. This is known as high probability trading. Look at this. This one. Price has not made new low. This low is higher than this. Okay, I will show it like this. Now it will be easier for you to see. This low is higher than this, than the earlier one. And the MACD made a new low. A beautiful pattern. The moment it gives me a breakout, I will buy here. My stop loss is the low of the rally itself. Again, the second breakout came here when the price made this low, and this low of MACD is below this. At this point, MACD made this low. This low is higher, but MACD has made a lower low. Now again, this is a buy for me. N number of buys it will keep giving you. Look at this buy here. This low is higher than this. And look at this. MACD has made a new low. Here is a buy for me. I will go and buy. I will not wait at all. I will buy on MACD. And again, this pattern does not give you a sell trade. Any stock. Let us use it on Reliance. Oh my God. Here, this one. Look at this low. This low is higher than this, and this low is lower than this. You should have to look at the lows of the past few lows, not one to one. Mark these words, and you will buy here, right? And let me go in the past. If this low is lower than this, okay, it is not. By chance, the price has made this low, MACD made this low. If by chance this low would have been lower than this low, it would have been a beautiful trade available to you. But you missed it. Oh my God. Look at these lows. This low is higher than this, higher than this, but this low of MACD is lower than these two. A beautiful trading opportunity available to me. Look at HCL Tech. We might have seen in HCL Tech, I suppose. We will shift the stock. Ultra Tech. Look at this. Price made this low, you would have bought here, you would have exited here. आपको बचा कुछ नहीं, बराबर बराबर में exit आया होगा. You have not lost anything also. Price made further low. Okay. Now it is bullish divergence, it is making. Price is making a low, but the MACD is not making a low. Since the pattern has already been made, panic is done away with. All the buys are your buy with a new stop loss of a low. Keep buying again and again on every breakout of MACD with the stop loss of the latest low which the stock has made. It will keep giving you n number of trades again and again. Right? Siemens. Look at this beautiful low. Price has made a low which is higher than the earlier lows, but MACD has made a low below the series of the low. The more the lows are there before MACD low, जितने ज़्यादा लो होंगे पहले, the more the number of lows which MACD has penetrated, the more panic it has absorbed. And the moment it has absorbed more panic, it means more smoothing out trade is waiting for you to happen. Let me go to Bank Nifty. Look at this. Is there any trade available? Yes, it is a trade available. This is a low which is higher than this. At that point of time, the MACD level was that. And the stock has made this low. MACD low it is. The lowest low of the rally. The majority of the lows are penetrated. Now it is a panic. Go and buy. This level is your stop loss which never hit. Which was never hit. Okay. Oh my God. Let me check this. If it is a trade available. Okay, no. Let us leave it. Again a trade. By chance, although this low is not, this is not a pattern because this low is comparatively slightly higher than this. By chance, MACD low would have been here, where my cursor is. This trade would have been a beautiful trade, as this trade is. Price has made a low which is higher than the low of the previous one. Price is following the Dow theory, but MACD is not following it. Look at the beautiful low. The risk reward ratios are in your favor. Your risk is very small, your rewards are high together with the probability of being right. So whenever you are working with a higher probability trade with the higher risk reward, there is no reason why you will lose money in this market. The more trades you will start following like this, the more better, much better results you will be having. And there is no reason why you will lose money in this market. The more patience you will have. But the problem is everybody comes and says, sir, pattern is very good, but they don't come on a daily basis. Sir, there are a number of stocks available. You will ultimately find it somewhere in say 15 days, 20 days, 1 month around. Or if you are not getting those patterns, it means your previous pattern is working like anything. Just give yourself a patience, identify 10, 20, 50 stocks in which you will find these patterns. And the moment you will get this pattern in any of the stock, go and buy, hammer it. There is no reason why you will not make money in this market. Identifying a trade and trading on the basis of that trade is much easier, smoother, happier, and rewarding than trading like a haphazard. manner in this market. You buy this for 10 rupees, 5 rupees, sorry. Enter into positional things, because my flavor is not or never being an intraday. My flavor is only identifying the positional trades, identifying the swing trades, and identifying high probability trades, wherein your rewards will be high, your probability of success will be high, and obviously your stop losses will be low, and you know when you are going to exit. Because the problem which normal people face is the price goes up, where to exit? This MACD line will give you an exit, right? Or you can craft your own ways for exiting from there. Okay. As I have promised, let us look at the latest scenario for Nifty. Here is a trade available for Nifty on the basis of MACD trade. Price has made a low which is higher than the earlier low, and MACD has made a low which is lower, which was a beautiful trade available. And look at the rewards for the trade. Nifty at now at present is below zero, no problem, gave a bullish formation. This gap is very important which the Nifty has made. This gap is very important which the Nifty has made. It has a very big significance. Based on this gap, the structure of Nifty right now is positive. There is a channel which is going on. It is expected to face a bit of a resistance over here, but it has taken a support on this. This is a natural resistance for the Nifty. It might want to spend a day or two or few days here, but till the time is this gap is there is no reason why you are going to sell it. There is no reason why you are going to sell it. Either you should go and buy, or you step aside. The fresh sell will come either with a pattern, if Nifty makes, or for or crossover below zero on an MACD. Till the time it is not happening, we are not interested in selling in Nifty. Although we had been a willing seller and a party spoiler, which some people call us, but still with a caveat that we maintain a view on the Nifty that it will fall over the period of time, and somewhere here it might come, because overall this formation is a bad formation. Overall this formation is a bad formation which is at present there. So bat is something like this. It is like this, and it it is like this, right? If you identify a Nifty formation, it is virtually like this. It is a bat for you, and bat has a different wings like this, and the same wings are here. Based on these wings, and to complete the formation of a bat, we are not surprised at all, because one target of 19,300 is pending since long for the Nifty. If Nifty would have hit this 19,300 there, we would have been happy and we would have only sold and went to our homes कि ठीक है अब आने वाले समय में अपने आप झटके खाती हुई आ जाएगी. But since it has not, so we will not be surprised, and since that the pattern is there, that is why we are not an aggressive seller in the Nifty, right? So if it goes up, and we will not be surprised even if it crosses high somehow, because it will be a crafted and a created move. But nobody knows whether it is a created or a crafted move or an actual move. So the thumb rule is go with the trend. At this point of time, the trend is long. Till the time this gap is there. The moment this gap breaks, go and short. At this point of time, either you are a buyer or you are not doing anything. Right? After time spending, there is no reason why Nifty can go up also. We are nobody to say why you should not be going up. Right? Merely to complete this formation which is pending. Otherwise, this is consolidation, and the more time Nifty spends here, the more confirmation it will give to us that a fall is coming. And the timeline for the fall, which we have based on different things, is somewhere around January 2024. So till January 2024, if it is not falling, our view, this is our view, then only we will throw away our things that yes, it is not falling. Till that time, it has all the time to make whatever it is doing, any haphazard movements. But we expect that till January 2024, the fall will start, and which will be a very big and a panic fall. And people will cry out of those. This is our feeling. If it doesn't happen, we have all the right to be wrong, frankly. And all those who are holding long positions, they should play it on their own basis. Obviously, we are trade. We always play as per the technical charts, and we have all the right to change our view. But till January, either it crossed 20,000, 20,430 around it is level, or if it is below it, then you have all the reasons that the fall is always on your head, and the fall shall be sudden. Fall shall be sudden. This is for sure. But till that time, it is not happening. We are okay with it. And look at the bat formation on a weekly chart again. People, why we are saying that till January we are there, or 20,400? Because look at this monthly chart. This is a flag formation. This is a flag formation. That is why we are saying if till January, if it is not falling, then this flag formation will have its impact, and it will give a further push up to Nifty. Otherwise, this will just go away. Second reason for that is, look at this yearly chart of Nifty. No, it is not working the way we wanted it to be. Just give me a second. Yes, this is an yearly chart for Nifty. Very few people look at this yearly chart, and as you are able to see, this formation is known as wedge formation. Wedge formation. We are virtually at the brink of that wedge, and if I do it like this wedge is going to end in few time. Since it is an yearly chart, Nifty make very small candles, seldom. So within this year, this calendar year, or just at the start of the next year at a max, that is why we said January 2024. If it wants to fall, it should start the fall either in this year itself, or immediately after, in the first day of the, or first week of the next year. Because this wedge formation, if it has to end someday, or it has to run through like anything. So run through like anything is a flag, but it has a time. So 2023 is a time for us. We are not an aggressive buyer. So in 2023, if we want to buy, we will only be a buyer in the form of a trader. Buy with a stop loss, buy with a stop loss, buy, and whatever profit you are getting, take it and exit. Don't we are not willing to hold for a long position for a longer period of time, merely because of these reasons, few reasons. Again, on the bank nifty, again, look at this. A same wedge formation is there for bank nifty, and it is the channel also for bank nifty on an yearly chart, which is again somehow it has to end. Or if it is not ending, and if they are able to swallow it for this year, then you have the years ahead. Otherwise, it will be a red candles for the year. So that is why for this year we are not too much of a bullish in anything. Yes, we are only a willing buyer here and there. Again, on a monthly chart, if I show you for bank nifty, look at this beautiful flag which is in the making. Obviously, it will take few months more to make. That is why the next few months will be very important for nifty, and obviously we are waiting for it to fall. But when we are actually falling, some rules for those is whatever we have done till today, it has to be below, MACD has to be below 0. If MACD is below 0, we are comfortable seller, we don't mind, right? The price should be below our averages, some of the averages which anybody can use. We are happy seller, because whenever you make a view, you have to protect your view also, because the market किसी का नहीं है, right? And market किसी के view को respect नहीं करता, उठा के फेंक देता है. If you believe that your view is supreme, you have to be a coward person in that. You play on your view with a stop loss. Then and happy to accept, no person can bring his ego in front of the market. And happy to accept that yes, it is there. And any pattern on the sell side, it means further to another thing. Any sell formation in a nifty and a bank nifty in this calendar year, we are not going to leave it for any sell formations, because this is the time when it might fall, right? So, that is why in the earlier 2 years we were buy only trader. All the bias formations are not to be left away with, they have to be gone for with a bank. Coming about the latest formats on nifty on a smaller time frame chart, say on a daily time frame chart, it is a beautiful gap there and a beautiful gap here. It is a natural resistance for the nifty, which is around and a bank nifty also. It might spend some time over here, and till the time it is spending some time, we are okay. If we are a very fast trader, go with a very short term moving averages, and if you are a medium term trader, go with a 20 round types moving averages. That will help you out. Plus, since we have touched upon the Bollinger band, MACD again we have touched in the Bollinger band. If we are a willing buyer, then we always look at one thing. Look at the difference between this line and this line, a center line and a green line. Make a half of it. Somewhere here. Every time you will just calculate the levels and make a half of it. Till the time the price is above it, please don't bring your uh, aspirations of selling. Keep it down. Keep it down. Only till the time the price is below it, and it gives you an indication to sell. Then only be a seller. You might be a seller in your thought that this year is going to be a sell for me, but don't sell rubbish. Don't sell anywhere. Sell with an idea. Sell with a strategy. Sell with a calculated risk. So you need a pattern, you need a MACD below 0, you need a price below this center line of this Bollinger band, center line and an upper line. When all the combinations are there, I will start with my word. मानसून का महीना, रात का समय, काले बादल, बिजली का चमकना, बादलों का गरजना, ठंडी हवा का चलना. So strong formation of a cell. It's the month of monsoon and the strong breeze is flowing, and lightning, thunderstorm, dark night, etc., etc. There is a high probability that the rain will come. When all these factors will combine, there is no reason why your cell will not activate, right? So Be a seller only on these scenarios. Till the time it is above it, either you step aside or be a buyer, or be a buyer, right? Otherwise, just step out of this market. Simple analysis about the market, about the index. And the next thing which you can do is look at the different indexes. Please inculcate the habit of looking at the different indexes. People have this habit of seeing only Nifty, only Bank Nifty, sorry. This distribution, which when it is happening, right? There was a time when only banking, when we were here, when we declared a short on this market, we said that only banking is there. The moment banking will give you an exit of a buy position, every other thing is sell. Go and bank short. Banking gave you a sell over here. Go and short, right? Similarly, when I start looking at the different indexes, Nifty, Bank Nifty, Nifty Pharma, Nifty IT, uh, Nifty Metal Index, Nifty 500 index, mid cap index, next mid cap index, etc., etc. The more indexes are in sell zone, the more comfortable you are for a sell. The more indexes are in buy zone, the more comfortable you are for a buy, right? And whenever there is tussle between these two, step aside. हमें को चौधरी क्यों बनना है, right? Whenever there is a tussle between, and market is giving you confusing signals, this is the time to be step aside, because mark my words, this time whenever Nifty will give a move, preferably on the downside, it will be a jerk like this, and after the move, don't be a first mover advantage, first mover while selling. You have enough chances to get a money out of it. Normally retail investor normally lose its money in this first volatile moments. Keep your ammunitions with yourself. Don't be an aggressive buyer for this year. This is the story for on the basis of technical analysis. I promised you that I will close my deliberations by 8:40. I love this topic. I am passionate about this topic. I can keep on uttering sleeplessly. But since a specific time has been allotted to me, and now I open the floor for questions. Ria ma'am, open to you.
Anybody who want to ask can write down the question. Any questions?
Anything about the market? Obviously, not the stock specific, obviously.
Actually, sir, I have one question.
Yes, ma'am.
I'm just a beginner in this market, so how I can practice it?
See, first of all, since you are a beginner in this market, ma'am, this market is not for you in a direct manner, right? Use an SIP route, use a mutual fund route, and obviously you can open an account for a practice purpose. Start using technical analysis, start identifying buys and sells based on the different parameters, or the parameters which we have uttered on this, we have discussed on this in this seminar. And after that, please practice those patterns on your register. Might sound childish, sorry, but this is the truth. Any trader, any investor, few words in Hindi, जिसने 2 या 3 रजिस्टर भर लिए ना, वो कभी लॉस नहीं खाएगा. Any person who has practiced for 2 registers or 3 registers, what you have to mention over here is the date on which you have identified the trade, what is the logic for it, when you are buying it, what is your stop loss. And after that, 30 seconds more, and after that, keep watching your trade, whether it was a profitable trade to you or it is a loss making trade to you. If the stop loss is hit, mark is on the red, stop loss hit on this day at rupees this, loss of rupees itne. have a virtual capital with you, that this much of the capital I might be investing based on the amount you might invest in future, right? Your size should be as per your appetite, and you decide the quantity proportionately on the basis of that, as if you are a portfolio manager, right? Then write down the profit or loss. Make at least 10 to 20 stocks as your pet, in which all the patterns which you are following should never be missed.
Like I have one question. For the beginner part, it should be I should follow that line pattern or candlestick or the technical analysis.
A technical analysis consists of line and candlestick formations. They are a part of technical analysis, and you have to follow the both. Line chart is only based on the closing, and somehow in those formations like cup with handle and a flag formation, it is must that you should be drawing the line based on the candlestick formation. So you have to use all of them, right? Yes, head and shoulders, double tops, double bottoms, you can practice on the line chart, doesn't make any difference.
Okay, sir. Thank you.
But the point is, start following. And the another thing which I would like to discuss with my viewers today also, and with you also, that number of stocks you have to make your pet, maybe 5, 10, 20, and you have to swear with yourself that I am not, and I like this pattern. Bring any pattern as your uh, thumb rule, or as your fancy pattern. If you are getting a trade based on this pattern, for example, you like inverted head and shoulder and head and shoulder formations, and you like say Reliance, say Tata Steel, or ICICI Bank, Axis Bank, and say Ultratech Cement, 5 stocks, you love it. If this head and shoulder or inverted head and shoulder, whenever it is making in these 5 stocks now, you have to take the trade, whether you have money available with you or not. If your money is invested in some other stock, exit. This trade has to be taken, because mark my words, your stop loss might hit, but I have never seen any stock faltering one pattern again and again. Means मैंने कभी कोई स्टॉक ऐसे नहीं देखा जो एक पैटर्न के हाथ दो के पीछे पड़ गया हो.
चेंज होगा वो तो.
राइट, सेम पैटर्न का स्टॉप लॉस हिट होगा, पर जब चलेगा बड़ा प्रॉफिट देगा. I have never seen any stock which is against any formation, against any pattern. If you start identifying a pattern, and please uska गठबंधन करा दे, and please link it with a particular stock and take all the trades of that pattern in that particular stock, there is no reason why you will not make money. Only thing is patience which is required. Any number of times, if any buy and sell is coming based on that pattern, you must take it. And it reminds me about one more thing, that whenever, although now it is a bad part of things which happen in the financial market, which what we call scams and all that, but you have to take a one correlation in that. Whenever these kind of things also happened, those cartels also had some few stocks as their fancy stocks. Eye opener. Means पैटर्न को अपना पेट बना ले, स्टॉक को अपना पेट बना ले, उसमें यदि ट्रेड आ रहा है तो कोई कारण नहीं है हमें वो ट्रेड नहीं लेंगे, लेनी ही है. रिमेंबर वन थिंग, दैट अर्जुन knew how to use all the weapons. You also know how to trade on different patterns, but you have to select one as your best one, which should never be missed. Any other question?
Methods also, no?
Sorry?
We should not be stuck to only one method, no?
What I'm saying is, make as much patterns as your fancy pattern, depending upon your appetite. Depending upon your appetite, obviously, right? You can increase the number of stocks with a bouquet of formations, right? You say, I will not leave cup with handle in these 5 stocks. I will not leave head and shoulders in this 10 stocks. I will not leave flag formation in these 20 stocks. Whenever they will come, you will make money. Problem happens with the retail investor is he take a trade in flag or cup with handle in a Tata Steel, stop loss it. Then he again take a trade on inverted head and shoulder on say Axis Bank, stop loss it. Then he again switch over to another stocks. Boss, what the hell you are doing? Look at this, आपका cup with handle का stop loss hit हो गया था, बाद में flag बना वो चल गया. Then he say, oh, I have limited money available with me. But you have to carve out the way for yourself, na, with the limited money available. It is a strategy based trading which you have to do. The stronger the strategy, the better it is. And if you are profitable on paper, which I started on 2 registers, then there is no reason why you will not be profitable in the market itself. That will give you an confidence. Any other question, ma'am?
Not from my side, sir. And no questions from the participants also till now.
Okay, no questions are in only 2 scenarios. Either कुछ भी समझ में नहीं आया, सब कुछ समझ में आ गया. Either it is all clear or it was all clear like anything, right? So let us take it in a better way. That
Positive thought, really good.
I take it as a compliment that everything is clear, and that is why they don't feel a need to ask such a kind of question for clarifications. Anything from anybody's side?
No, from my personal viewpoint, this was a really good session. Very informative.
Thank you, ma'am.
So, should I call the vice chairman for the concluding remarks?
Yes, ma'am. Yes, please.
Now, I would like to welcome the vice chairman CA Kota S. Srinivasa, a fellow member of Institute of Chartered Accountant of India and a member of Institute of Cost and Work Accountant of India. He had served our institutes for more than 2 decades as a member of various committees. Now, welcome, sir. He's there in the meeting.
I doubt.
I think he's not joined. I think he's not there.
Okay.
There's some co-host.
Till the time they are joining, I would like to utter 1 or 2 more words about the financial markets.
Yes, sir.
Always remember one thing for everybody. Don't fall prey to the tips which are flowing in the financial markets, in the news channels. Because remember, tip na khane ke baad hi di jati hai. When the news has actually has an impact, then only it comes in a public domain. And that is the time when the retail investor actually falls in the stock and it becomes a long-term investor. Never allow the losses to eat your capital. If you allow the loss to eat your capital, you will never make money in this market and you will always keep on losing. इससे बढ़िया है कहीं पर दान कर दो. Keep the losses to the limited and keep the profits to the highest. Let them run. The moment you allow your profits to run, that is the time you are making a best out of it. As we learned in Dow theory, that whenever in an upside, the highs are bigger, the uptrend is big. That is why go and buy and hold the positions. Stop losses should have to be adhered to. मेरा मन कह रहा है, मेरा दिल कह रहा है, sorry. Whenever there is a stop loss, you have to exit and butcher the stock like anything. You have to exit from the stock, come what may. If you are not exiting the stock, when the stop loss is hit, it is your fault, not the fault of the stock. At that particular point of time, you are not going to say, ये तो वैसे ही hit हो गया, sorry. Because problem with the retail investors is, you have bought a stock at 500, it is coming down, say at 400. They buy more. It comes down to 300, they buy more. it comes down to 250 और कहाँ जाएगा? They buy more. Boss, 50% capital is eroded. If you are finding this stock to be a very good stock, very undervalued stock at 250, please look at your knowledge, what you have seen at 500. And your 50% capital is eroded, point number one. And this stock has to rise now 100% from 250 to 500 to bring your money back, to bring at an earlier level. So we are a believer of one thing: never. Obviously, there are different sides of this thing. Never average the falling stock. Always try to average a stock which is rising, because the stock which is following your parameters, which is following your analysis, which are moving with the momentum, that only stock that has to be bought. If somebody has to go for an IPL or something else, on which cricketer, which player you will choose for your advertisements? Obviously, you will choose a person in flavor for your advertisements contract. You will not use the loser for your advertisement contract, right? Always give salute to the rising sun, not to the sun which is setting down. So the point is, don't average the falling stock. That will virtually crush your capital, which will butcher you. And second important thing is, which we always keep it important and keep it in our mind: keep booking the profits. Because I've never seen a person losing money who keeps booking profit, right? Keep booking profit is a key. That is, look at the satellite or a shuttle which goes in the orbit. It goes with the weight, and it keeps shedding its weight the moment it is moving further up. Same thing you have to do. For example, you have bought, say, for example, 1000 quantity. You bought 1000 quantity of a stock. You are in a bit of a profit, exit 300. You're holding 700. Price is giving you more money, exit 300 more. You are holding 400. Price goes bit more, exit 200. You are holding only 200. Let it keep happening, because even if it comes down and hit the stop loss or a trailing stop loss, whichever you will be using, you will still be ending in profit. And if the price keeps on moving up, that 200 quantity will give you enough result so that you keep on making and minting money from this market. That is another key area which has to be focused upon, and which is normally less talked about. Always, which we call it a profitable pyramiding. You enter into a stock and you keep offloading the positions and hold the comparatively lesser quantity for a longer period of time, because till that time you will have another opportunity to buy or sell, etc. For a first time investor, obviously this market is for you, but you have to research only in the good stocks which are fundamentally good, which we call techno funda approach. Techno funda means, we are not saying that go and look at their balance sheets, etc. The simple formation for that is, close your eyes and identify the stocks which or the companies which will be there after 50 years, after 30 years. Look at the products which you or your kids will be using after 30, 40 years. That company will be there. That company will keep selling its products, point number one. There is a visibility to the sales to that company. Second thing is, there's a customer support for that product demand. Their preferences may change, and that company will keep making the profit. And that profitability, since we all are chartered accountants, that profitability will keep giving push to the earning per share. And the more the earning per share keep on increasing, the P will reduce, because either the stock will rise. If the stock is rising, you are happy. If the stock is not rising, market price divided by earning per share, the P will reduce. One day the sense will prevail, and people will identify the juice in that stock, and they will come and buy this stock. On that day, it will rise like anything. This is what we call a techno-funda approach. You use the technical analysis only in the stocks which are fundamentally strong, fundamentally good. And for fundamentally good stocks, one of the thumb rule is close your eyes and look at the things which are the products you are going, or which are the companies which are there to stay, say after 30, 40 and 50 years. If they are there, use your technical analysis only in those stocks. Over to you, ma'am.
Yeah, it's from my side, but still I think Vice Chairman sir has not joined.
Okay. So we are ending the session right now, or you are waiting for them?
Yeah, I think I should call and confirm once.
No problem at all. No problem. For the viewers who are there, until the time Ria is calling sir, let us talk about one more thing about the markets. Next important thing which you have to take care is, look at the overall scenario. Look at the overall holistic view in the chart. If the price is in an uptrend, which is a clear cut uptrend, which we all normally say that बच्चे को बुला के पूछो, if he is saying the price is going up, sir uptrend है, उसको दिख रहा है, आपको नहीं दिख रहा है, right? There is an uptrend. If he is able to see, you are not, this is bad, right? So point is, in an uptrend, try to be a buyer. In a downtrend, try to be a seller. Never bring your ego in front of the market, because nobody can. मेरा मन कह रहा है, my heart is saying that the price will come down. Sorry. As I gave you an example, that even if we are expecting a fall in the market, still we have kept few parameters for us for selling. That if the price is below that, say one of the parameters below the center line, or MACD below 0 and some other patterns, then only you are going to sell. Otherwise not, because ये market किसी का नहीं है. And remember one thing, हम रहे ना रहे, ये market हमेशा रहेगा. As the sun will rise on a daily basis, as the moon will come out on a daily basis, this market will again will be there forever till eternity. It is we only who will come and go. So this is the important point which you have to take care of.
Sir, due to some emergency, Vice Chairman sir won't be able to join.
No problem at all. So we no issues. We can end.
Yeah, thank you so much, sir. It was a really great session. Like, I'm a beginner, I'm going to particularly use the advices given by you.
Thank you.
Market trading and all. Thank you so much, sir.
Thank you. Thanks a lot.
Thank you for your time.
Yeah, thank you. So shall I leave the meeting? Right?
Yeah, sir. I'm ending it.
Yeah, thank you.
Okay.